Wall Street's done great. It can continue doing well, but it's Main Street's turn. It's Main Street's turn.
This is the biggest policy mistake in 95 years.
The Nasdaq is in a bear market and the S&P is quickly on its way. Trump's tariffs ended up being much worse than expected.
We got some breaking news for you right now because China's finance ministry is saying it will impose additional tariffs now on U.S. goods. That's going to start on April 10th at a rate of 34%.
The Great Reset is in full force and it's pretty clear. Trump wants a quick and decisive victory, making tariffs so extreme it's inevitable to have a global recession. The only way out of this is if Trump capitulates or we see a trade deal that all parties accept.
We are the debtor nation. We have the trade deficits. The surplus nation is in the weaker position. They're in a deflationary recession/depression right now. They're trying to export their way out of it, and we can't let them do that. They've just got such a big deficit with us that
they need our markets.
They can't survive without them.
Now, from my point of view, the two biggest players the market is concerned with are China in Europe. So far, China retaliated, causing the second leg down on Friday, but Europe is interested in negotiations. But if those turn sour, I'm expecting another leg down. Trump is betting on the Fed to cut rates, softening the blow for markets and the economy. But the Fed has reiterated they're not cutting rates unless employment breaks or inflation breaks. Now, because we got to wait for this data to actually come out, that leaves a huge pocket of volatility and potentially further downside. Now, markets are at extreme fear, and usually that's a good buying opportunity. But this is simply because when the VIX spikes, it usually capitulates, leaves a tail, and comes back down. But this time, the VIX spiked and it closed at the highs. Now, the last time the VIX closed at the highs and at this level was the pandemic, and then the VIX continued to surge, which made a better buying opportunity. And we also got to keep in mind the market is not going to turn around until the Fed signals more support, rate cuts, quantitative easing, which may not be anytime soon. Now, looking back at 2018, the markets needed negotiations taking place to recover. If there is retaliation, markets are going to dump. It's as simple as that. The good news is markets are extremely oversold, so you're probably going to get a bounce, just like last time, before we see if the European Union starts to retaliate. Both service and manufacturing sectors are reporting a huge contraction in employment, putting it in recession territory, but prices are also rising, and that puts stagflation on the table going forward, which is the worst case scenario for the economy. Now, someone's going to eat these prices, and it's less likely to be the consumer as they move to more essential purchases, so I'm expecting business employment to roll over. And markets are seeing the same thing. We see credit spreads are blowing out, which means investors are ditching corporate bonds for government bonds because the probability of corporate defaults has risen dramatically. Treasury bonds and defensive stocks are breaking out as a flight to safety, while growth-oriented names are getting crushed because earnings growth is being revised lower. But the collapse in oil prices will lower the input prices for businesses, softening the blow somewhat, and also lowering gasoline prices for Main Street. The drop in treasury rates means mortgage rates will also come down, adding liquidity to the real estate sector. So it looks like Trump is lowering rates and oil prices at the expense of the stock market. But I'm pretty sure he comes back with promises of tax cuts, deregulation, and fiscal support. But we can only guess when he communicates these plans. Now, consumers can always shift their spending and increase savings as prices come down. But if they lose their job, well, that's the worst case scenario, and the Fed will have to step in. Now, the longer this drags out, the worse it gets because of all the uncertainty. And the question is, who folds first? Or when does the Fed cut rates? So the stock market is expected to continue to crash, but it only takes one tweet, one deal to get things turned around. Now, in my view, the single most important factor is if the European Union and the UK are able to make a deal, or if they retaliate. The next 2 to 3 months are looking rough, but I'm expecting Trump to be more positive about these negotiations, and the government needs to start talking about these tax cuts to relieve corporations that are getting pummeled by the elevated tariffs. Now, if these negotiations work, the market still needs the Fed to cut interest rates. Now, when it comes to the economy, the market's going to be focused on retail sales and the inflation rate. Best case scenario, retail sales don't collapse and inflation falls slowly. Worst case scenario is the complete opposite. Retail sales print below expectations and inflation prints above expectations. In this case, the market's going to price in stagflation. We're probably going to revisit the 2021 highs before we get any relief from oversold conditions. If China and Europe are both retaliating and inflation rates don't come down, well, that's the worst case scenario, and we're looking at another bear market. The truth is, there is no real certainty. This could end in a couple months or can be dragged out till the end of the year.
We want more manufacturing, which would mean a smaller part of the economy's consumption. The Chinese have this imbalanced economy with too much manufacturing. You consume more, manufacture less. We are going to consume less and manufacture more, and we'll be military rivals. There'll still be an economic rivalry, but we're going to level the playing field by a lot. Now, that's not going to happen tomorrow. That's not going to happen in a month, but over the next few years, they may have to come around because I think their business model is broken. I think President Trump's broken their business model with these tariffs.
So you're describing, the famous scenario where if you take a bank loan, the bank is in charge. They can repossess whatever you borrowed against. But if you take a big enough loan, you're kind of in charge of the bank.
Exactly.